How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus Japanese yen. UJ, as we talked about in that previous episode, we were able to get that buying opportunity using a buy limit order. After seeing that down close candle, we like to buy after down close candles because it's ideal to buy at a cheaper price. The fact is, we're also buying below June's opening price. So the monthly open, we're buying below it in a discount. So we got a very high quality trade for a potential long opportunity into the next 20 days. Now, I'm not saying this is the low of the month, but we could be catching the low of the month here. Right now, we're below the weekly opening price or Sunday's opening price, and Tuesday is posing the low. If you take a look at this swing formation that we just formed, that's a swing low that just formed. Tuesday purges Monday's low, and Wednesday reverts back to Tuesday's high. So that's a purge and revert. A swing formation is a purge and revert, no matter how you want to define it. That's what a swing point is. It is going to take out yesterday's low, and then the next day it's going to take out that high. So it took out Tuesday's high. Now that we see this Thursday candle that opened not too long ago, about an hour ago, we want to see if this is going to continue to take out Wednesday's high. So we got a purge and revert. Let's take a look at the DXY. We see the same thing. Why are we seeing the same thing? Because we know dollar and UJ are directly correlated. If dollar goes up, UJ is going to go up. And that means yen is going to depreciate in value. And we'll get to the yen futures as well. The same thing. There's a purge and revert. We can see Tuesday purges Monday's low, and Wednesday's candle reverts back to Tuesday's high. We're about to get that daily open for the DXY probably in a couple minutes now. It's currently 7:01 p.m. here in New York. A lot of people think that the new daily candle starts and opens at 12 a.m. noon. It does not. If you are trading FX, it opens at, I think, 6 p.m. or 5 p.m. Don't quote me on that. I always get the times mixed up. But I know for the DXY, it opens around 7:03, 7:04, something like that, 7:05. So we're looking at price purging, sell side, buying cheap below the monthly opening price, and seeing if price is going to rally. Anytime the market raids a liquidity pool, that is generally a great opportunity for traders to get into the market. We rated this swing low here. Though I don't have it marked off, it's still significant because it's still a swing point. There's sell side liquidity below that low. And we also rated the 20-day IPTA low. So I want to see if price is going to get up and get away. Let's take a look at the yen futures. Come down here where you're at. There you go. You should be seeing the inverse. You should be seeing price making a swing high formation. And we did, right? This looks exactly inverse to what UJ looks like. UJ had a large candle down. The Japanese yen here on the futures has a large candle up. And the next day, what happens? It sells off. We're unable to get that sell on strength with that sell stop limit, and price runs down. Sorry, sell limit, and price runs down. Instead, you would have got that sell stop order if you were trading the yen futures. We want to see if price is going to continue to sell off. That new daily candle just opened not too long ago. We're going to see if this Thursday candle is going to continue to sell down and get down to this swing low and back below the opening price of the month. Now, many people may ask, how do you know this stuff? Or how were you able to speculate that idea that we just saw in the last 2 days or in a couple hours? With experience and just studying the market without any indicators. No momentum indicators, no moving averages, no volume indicators, none of those sorts of things. We're just solely looking at price action. And we're looking at it from the higher time frame. When you look at it from a bigger perspective, the bigger picture, you're able to break off smaller pieces so you're able to understand, okay, if I put this and this together, I should get this. And that's how I'm able to tell you, okay, we should be selling after this up candle, or we should be buying after this down candle, or why these opportunities are presenting myself and why am I even considering them an opportunity. There are times where the market is just going to stall out and you have to sit on the sidelines. You have to wait for something to happen. But the fact that we saw sell side rated is a great opportunity for you to go long. Sell side was rated below the swing low and all these previous daily lows as well in that drop. In this candle itself too. And price should look to push higher. We want to see if this is going to happen next. We run a swing high. I'm not sure if price is going to form a swing high short term this week on the daily, but it could, right? We get a swing high and then price runs it. And we also create a higher swing low compared to this one here. And once we run that swing high, let's say we don't get a swing high and it just runs this one, the 20-day high, that's back into what? Bullish momentum. And if we got bullish momentum, I'm going to look for that sequence of higher swing high, higher swing low. That's bullish trend 101. Everything vice versa when bearish. So let's take a look at all the other yen crosses. So look at AJ. What happened after this down candle? Buying. Let's take a look at CAT-J. What happened after this down candle? Buying. As you can see, these are all correlated. NJ, quick repricing immediately. Almost the same size as the previous candle today on Wednesday. Take a look at EJ, similar. And last but not least, GJ, very similar. So we're going to see if price is going to continue going up. That false bear momentum. We want to see if it's not bearish momentum, but it's actually a false break. I'm going to obviously lean for the false break because I'm in a long position. But if it doesn't hold up, don't be afraid to abandon ship. Don't be over optimistic and saying, oh, the trend must hold up. The trend must hold up. The trend might be changing on you. And it's okay to change narratives. A lot of people publicly will not like to want to get it wrong. And I don't mind getting it wrong in front of my audience or in front of the community or fellow traders. That's how we learn. People have to make mistakes. You can't be fearful. We want to see if this is going to continue trending up. Hopefully you found this insightful. Peace.